Welcome everyone to the talkin.TAX podcast, brought to you by your host Omar Aswat, owner of ASWATAX, a specialist tax advisory firm, and today we have another special guest. Before we begin, I just want to quickly walk through the previous episode. So episode 1 was a solo episode by myself talking about inheritance tax. We started from the basics and we moved our way up towards potential planning techniques, strategies, structures that we can use and implement. Episode 2, we had Jerry Giles discussing through his years of experience, decades of experience, the controversy around less tax for landlords and the ongoing drama, you could call it, with Property 118. Episode 3, again, a solo episode. So every odd episode is a solo episode and every even episode is with a special guest. So episode 3 was about the capital gains tax reporting when it comes to sale of residential properties. Previously 30 days, now 60 days, payment and reporting. Episode 4 with Stephen Mather, the buying and selling business solicitor, you could refer to him as. Episode 5 has been recorded, not yet published, but will soon be, which is around employee ownership trusts. So a very beneficial route or exit for business owners, potentially capital gains tax free. So paying 0% capital gains tax on the sale of their business to the employee ownership trust. So effectively, you're passing on the business to the employees, and this provides a motivation. It allows the culture of the business or the company or the organization to continue, and many other benefits and drawbacks that we discuss in that episode. In this episode, we have Salman Anwar from ADL Tax. Now, just a bit of background, we actually recorded this episode over 2 years ago, and this was actually supposed to be my first guest, my first episode. I can't really remember what happened, but we sort of scrapped it and we said we'll do it again. So great to have you on, Salman, and thanks for your time. How's everything going? How's your morning been? Tell us a bit about yourself.
No, thank you, Omar. Thank you for having me on the podcast. Yeah, we did record this. This is take 2, isn't it? I think it was various different things, but no, thank you for asking. I am well. I've had a good busy morning, as most of my mornings usually are.
Sure.
And yeah, it's great to be on this episode. So a bit about myself. So I'm an ex-HMRC tax inspector. I left HMRC in 2018. While I was at HMRC, I worked in the large business service as well as towards the end of my career, majority of my sort of real work was in the fraud investigation service, and in particular I dealt with a lot of offshore cases through the various disclosure facilities as well as COP 8s and COP 9s. I left HMRC, as I said, in 2018. I then joined a top 10 accountancy firm, sort of cut my teeth basically on this side of the fence, and I learned how to sort of deal with the commercial side of things. I had to learn that very quickly. It's a bit of a transition, to say the least, going from the civil service to the private sort of sector. I worked at that firm for 3.5 years. If I can say the name, was Mazars, and then I joined BDO in 2022. I worked there for 2 years and ultimately set up my own firm in April this year, April 2024. All throughout my career, I've been a specialist in tax disputes, which is anything to do with HMRC problems, let's say. I don't tend to deal with much else other than that, as we've discussed in the past. It's just solving problems, basically. That's me.
Excellent. Great to have you on. Always a pleasure discussing certain cases with you as well in the background. In terms of for the viewers, this episode we will. So as you've heard, Salman is he's worked on both sides of the spectrum, and as we've got one of the bullet points, the good side versus the bad side, and I'll let the viewers decide what side is good and what side is bad. But from our point of view, the good side is in the private sector defending clients. So effectively what you learn from this episode is try to go through step by step, but number 1 would be we'll understand the differences between inquiries and investigations. So that's the first thing to understand. Number 2, we'll dive in a bit more into COP 8s and COP 9s. We'll talk about nudge letters and then perhaps towards the ending we might discuss, one or two cases, whether recent or from the past. Just before we go into inquiries versus investigations, when I say the good side and the bad side, what would you say are, for example, 3 key differences? So I think you already mentioned one, which is the commercial aspects, right? Which is the private versus public sector is a completely different ball game. Within the public sector, fixed salary and the rest of it. Private sector, you're going out looking for clients and that sort of thing. So what would you say are 3 key differences? Because I think people will find this beneficial and insightful as well, and myself included. So three key differences between the good side and the bad side.
Well, yeah, I mean, everyone will have their own definition of good and bad sides and light and dark and all of that. To be honest with you, joking aside, I had a great time working for HMRC, and I've got a lot of time and respect for everyone I work with. I'm sure, I know you do, Omar, and all practitioners do. We would love HMRC to function as they really should do, which sometimes, in my experience, it doesn't always happen, but equally credit where it's due. Now, so key differences, I think, like you said, I touched on one already, which is around the commercial aspect, but that's quite it's a kind of a catch-all. So I mentioned one around sort of, when you're on this side, you are effectively, your job is to deal with clients and effectively bill them and make a return for the firm you're working on. So my firm's, my goal is to help clients so I can charge them fees, which helps me make a living, right? Now, when you're in HMRC, your salary and your pay packet isn't linked to who you go out and investigate, how much money you bring in, all of that. There is a misconception. Sometimes people think, because a particular investigation is going down a certain route, people do ask me that question: is the inspectors, are they going to get some sort of bonus or whatever? I never came across that. I was a red line. That was HMRC was never offering it. As far as I know, at the moment, they're not offering it, and I don't think it'll ever happen, really. So your modus operandi when you're working in HMRC, and if you're working in what they call compliance, I know we call, our side, compliance is the tax returns, but for them compliance is the investigations, the inquiries, and so on. When HMRC staff carry out compliance activities, what they're trying to do is A, make sure that you pay the right taxes, and B, get the money in for the exchequer that pays for public services. That's kind of the grand sort of aim for HMRC, is to pay for the public services that we have. Basically fund government. It's the only department that brings in money, largely. Everyone else spends money. So that's one side of the commercial part. The second difference I'd say is quite simple, is you don't have to account for your time to the degree that you do on this side. So timesheets and that aspect of it. When you're on the private side, you are you have an awareness and a closeness of how businesses operate, how individuals go about their business, and so on and so forth. In my experience, that is been either that's lacking in HMRC in certain parts of it, and in other parts it's been drained away because they're losing those people with experience who have experienced that. Because when you're working in the civil service, largely you're in a bit of a bubble. You interact with businesses and taxpayers, as they would call them, but you're not in there operating a business or running a business, or you kind of see it from the outside and you have a tax hat on. When you're on this side, you get to see what drives people, and sometimes the tax consideration is, I'm sure you deal with this all the time, right? The tax is almost the last thing somebody thinks of when they go through a commercial transaction. It's a large part of it, and I'm sure you would say they should think about it more often, or more actively, to make sure they don't leak the tax. But most of the time, business owners do things and then they think about the tax. It's not. Whereas in HMRC, they'll think, well, everything's done with the tax impact in mind. So that's also an important bit when I say, there's differences in the commercial aspects of it.
Sure.
I mean, I think that's pretty much 3, but if I could just add one more thing, which would be just the size of the organization and what you're working for. So HMRC, I remember my first ever boss outside of HMRC referred to as an institution. It is one institution. So when you're in HMRC, you're working for this huge organization, and your life is HMRC. So that feeds into it. So that's also a difference. Sure. You can pick the biggest firm in the country in terms of accounting and professional services. Doesn't come anywhere near the size of HMRC. So that's a key difference. When you come outside of that, you have to get to grips with it. You're a bit more agile for that, but also you lack the size of the organization in certain aspects.
Sure. Now that's quite interesting. It's quite interesting, and it's I think it's very there's obvious direct benefit for yourself, setting up on your own, a few months ago, back in April, having that previous experience and that background, because now you can you can advise clients with both angles in mind, right? Which is, okay, HMRC can potentially think of it like this, or they'll take this route, or they'll take this action, for example. So I think that's a win-win.
Absolutely.
I just want to,
Yeah, absolutely. I wear those hats, and quite frankly, it is part of my USP that I'm an ex-HMRC tax inspector. I did the graduate scheme. I was a fraud investigator, and I bring that experience and the skill set learned from that into what I do at the moment. So I am able to give that kind of insight to people into this is how HMRC might view it, not just how we solve it, but and that is quite valuable to clients most of the time.
100%. I just want to clarify, when I say the good side and the bad side, I am joking in case any HMRC inspectors are listening to this. It's just a complete joke. And yeah, as you say, it's about all the the different organizations. It's about working closely at times as well with HMRC, working together in collaboration. But thanks for the the insights in terms of the real life aspects and how things work on the ground. In terms of for the business owner, landlord, the accountant, anyone in the professional services industry, how would you explain or how would you describe the difference between an inquiry and investigation, please?
So it's a really interesting question. I think I put something on LinkedIn about it recently as well. It's because in certain circumstances it means nothing, in the sense that when you're dealing with HMRC you have to almost kind of forget about the distinctions, and in other situations it can be very important. So I suppose the starting point is to remember, right? You've mentioned business owners and landlords and people like that, but if you take a step back from that, you zoom out a little bit more. HMRC administers pretty much every single tax and duty that is to administer in this country that brings in money to the exchequer, right? And he even administers things like national minimum wage, which is neither a tax or a duty. It's an obligation on employers to pay us at a level. Even that sits within HMRC. And there's a few other obscure things that HMRC deals with, which you wouldn't think a revenue authority would do. But when you think about it, you're thinking about from customs duties, excise duties, through to your income tax, corporation tax, VAT, which most business owners and people listening would be aware of, and even to an extent, dealt with tax credits in the past and so on and so forth. Now, each of those taxes has certain statutory rules around how HMRC goes about looking at them. Certain taxes have inquiry provisions. For example, income tax, self-assessment, you'll have Section 9A, Taxes Management Act 1970. The corporation tax, they're in Schedule 18 of FA 98, and so on and so forth. Now, when it comes to VAT, there isn't an investigation inquiry power per se. When it comes to employment taxes, there isn't a statutory inquiry power. So, the first thing to note is, if there is a statutory power, that's an inquiry. That's a statutory inquiry, right? So, Section 9A is a statutory inquiry power. And if HMRC opens that inquiry under Section 9A, there are certain rules, certain conditions, for example, the time limits and all that sort of stuff. They also define what HMRC is able to ask for. That's self-contained. You then have either those taxes which don't have a statutory inquiry provision per se, or historic years for the other taxes I've just mentioned, income and corporation tax. How does HMRC go about looking into those? Now, the HMRC has information gathering powers, largely contained in Schedule 36. And within that, HMRC is able to formally ask for questions. But usually, HMRC doesn't go in and ask formal questions unless it's a statutory inquiry. That it has to open within a certain time. But the opening salvo from HMRC, so to speak, is usually always an informal request. But the underpinning of that is a Schedule 36 power, or the Schedule 36 powers, and any other information powers it may have for a particular tax or duty. Even beyond that, HMRC's general purpose under the Commissioners Act 2005, when it was created, when the Inland Revenue and Customs and Excise came together and created His Majesty's Revenue and Customs, as it is now. It gave HMRC, it brought the powers together to say HMRC has this administrative duty to administer taxes, duties, and all sorts, and it can do all of that. Now, so HMRC can, even under those powers, conduct informal investigations which are wide ranging. So it'll ask questions around, okay, have you paid the right taxes and stuff like that. But I think the most important question anyone who's in receipt of a HMRC inquiry, and usually it's going to be the professionals helping them, should be asking is HMRC entitled to do this? Now, I've described a broad set of powers that enable them, from the sounds of it, to do all sorts, but that's not necessarily the case even after having said that. You still have to, HMRC still has to operate within the realms of those powers. Now, another key aspect of this is that HMRC will ask in the hope of getting stuff, right? If you don't ask, you don't get. So that's not always made clear to the taxpayers, whether that's a conscious decision on the part of the particular officers or otherwise. I'll leave that be for the second, because that's a bit murky in terms of the topic. But HMRC may, even under a statutory inquiry, ask for certain things that it's asking informally that are not required by it. So the advisors should always be looking at that inquiry, the investigation, whatever you want to call it. HMRC even calls these things compliance checks, right? It doesn't like the term investigation, so it might call them compliance checks. We need to be asking the question, are they entitled to it? Now, I'll give you an example to kind of conclude my answer, so to speak, at this point, and see if you've got anything follow up on that. But I was assisting an accountant with an inquiry letter from HMRC, which had come through on the back of a property incorporation, which, bread and butter for you, no doubt, Omar. And when we looked at the inquiry, so the steps in a property incorporation are, there's a partnership, usually ends up going into a limited company after a few years, and then you get incorporation relief and you declare the profits to the company and so on. Now, HMRC had opened these inquiries under the statutory provisions into the partnership or the personal return. The long and short of it was they were out of time. Now, if I hadn't spotted that, we would have been answering questions to HMRC that it wasn't entitled to ask, right? Because it was outside of the time period. The return had been submitted with enough notes on the return, with the claim for incorporation relief, and all of those things were evident. But because HMRC had inquired into a subsequent amendment and not the original return, which contained the claim, we were able to say to them, sorry, hold your horses. You can't take this any further because you're out of time. And what we got on the back of that was a closure pretty swiftly and an apology to say, okay, sorry, we are out of time. And it closed the inquiry. Now, the benefit to that is we've just stopped the client, or in this particular instance, the insurance company, incurring cost for the next potentially 2-3 years dealing with an inquiry that had no basis. So it's important to distinguish what you're faced with, and most importantly, that asking the question, is HMRC entitled to what they're asking to receive? If they're not, it's not always the case you should put the barriers up, but you should make sure you understand that, because the flip side of that isn't just a long extended inquiry. As professionals, the other side would be professional negligence. So if you've not spotted something like that, and your client ends up facing inquiries and on the back of it potentially a bill because you provided HMRC with information you shouldn't have, the client would have a reasonable case against you in that sense. So that's sort of a very, very quick tour through inquiries, investigations, and compliance checks. And like I said, the key thing is making sure you know what you're faced with.
No, I think it's very, very interesting. One thing that I sort of took away from from some of the things you mentioned is that naturally the knee-jerk reaction when receiving such a letter from HMRC would be to comply. We're not saying not to comply, but it's just more around taking the correct approach. It's not about just, okay, we've received this letter, now we have to just start giving all the information. It's about, okay, we've received this letter, ideally get the right people involved, how do we deal with this? How shall we take this forward? What are the next steps? And it's quite interesting you mentioned about the property incorporation case, because perhaps we can just discuss that a little bit more, if that's okay. As you know,
Sure.
we did mention we'll discuss some recent or previous cases. We can probably bring that in now, just because the whole property, because I've seen a good few inquiry letters as well, and you know, I think right now HMRC are particularly questioning whether a business was actually whether there actually was a business, so the whole 20 hours per week and the rest of it. And I think sometimes people, landlords, they may or even accountants and advisors, they may have the misconception that that if you have a certain number of properties, then you can argue a certain number of hours. But that's not always the case. You might have 20 properties. So for example, someone may have 6 properties, someone may have 20 properties, let's say. But the individual or the husband and wife or the family that run the that own the 20 properties and let them out, all 20 properties are managed by estate agents. So these guys are doing, they're not doing much. And on the other hand, the 6 properties, the individual, the husband and wife, whoever's involved, they are literally day to day doing everything. So that includes, the physical repairs, finding tenants, advertising, doing the books and the rest of it. So that's one thing I'm aware that HMRC have been questioning. And of course, there's the other thing, which is the substantial incorporations strategy or whatever that was marketed. But yeah, in terms of this particular case, so what was the general background, and what year did we go back to? When did HMRC open the case, and what was the issue, or what was the reason for you guys to push back?
Yeah, I mean, look, everything had been done with advice, with the accountants, the chartered tax advisors, and everything else. I saw the report once the inquiry came in, and this was an accountant who I work closely with, whose clients these were. I think we were going back a number of years in terms of when the business had started as a partnership and then eventually into incorporation sometime later. There were a vast number of properties involved. You're looking at a portfolio that was worth well over a few £1,000,000, so multiple billions effectively. And HMRC started with a personal inquiry into the husband and the wife relative to the claims themselves. So when HMRC opened the inquiry, it was within the time for the amendment, but under Section 9A and the subsequent provisions within TMA, the inquiry allows HMRC to ask for anything that's contained in the return or required to be contained in the return. That goes for the return and the amendment. So when HMRC opened it into an amendment, anything that's been amended it can ask into, but if it's now out of time for the original inquiry, then it can't ask for anything that was already included in it. There are other provisions in terms of discovery and so on, which might still allow HMRC to go back and ask questions about those closed periods if it discovers something. But if the information has already been included and made available to HMRC and they were fully aware, again, there's provisions that then stop them. So it's a bit of a back and forth. You can do it, actually no you can't. Well, you can do it this way, well actually no you can't, and so on and so forth. So HMRC were asking all of those similar questions. They were like, in terms of how did you compute the relief amounts, so how did you compute with the the holdover amounts and all sorts of stuff, right? So how did you figure out the figures? What were the valuations? Who did what in the business? All of those questions were listed. We just didn't address them because HMRC were out of time. We went back. I wrote a page and a half long letter which dealt with all of the different scenarios in terms of Section 9A is closed. It could actually, in my view, it should have actually been a partnership inquiry if they really wanted to ask about the partnership, because it was a partnership matter, but they hadn't inquired into that. The amendment, the discovery. So I did a belts and braces response to deal with all of the points that could come back, and eventually we got an acceptance that, well, we're sorry we did open it outside of time. So this claim was worth, like I said, many millions. So you can imagine the tax on that if it had been wrong or potentially wrong, sure. Or even if you forget that for a minute, the amount of fees involved in dealing with this, it would have been really, really substantial.
Okay. Very interesting. That's a very interesting case. So effectively, HMRC, they opened the inquiry fine. But then you guys, I'm just sort of, giving the overview. You guys pushed back and said, hang on a minute, you're out of time. And then they simply came back and said, you're right. So how would it work then? How would it work internally from HMRC side? Because surely before opening the inquiry, they have to do their background research and look at the dates, the dates and, these sections, these schedules. That's the starting point from, I'm talking about through your experience from working for HMRC. Surely you have to start looking at dates before you start opening something up to a client. How do you put the two together? Because they did open the case after
I can only speculate as to why it got through the net effectively, but you're right, there is a net which should stop this from happening. When I used to open any sorts of investigation, and I opened investigations as opposed to specific inquiries, but my wider investigations under Cop 8, Cop 9 and so on would contain specific inquiry notices, but I would check that. Everybody I worked with would check that, all of the teams I worked with. But look, human error, not following processes, or trying it on. I don't know which of those three it was. I don't have an insight, but I can only speculate as to why it might have happened.
We'll come to so I completely appreciate them 3 points you mentioned: human error, not following process, and trying it on. And we'll connect trying it on with nudge letters very shortly. So stay tuned for that. But what I want to mention is I've got a particular question for you whilst we're on this whole property matter. And it's a very it's a current thing that's going on, drama online and this that with Property 118. Have you come across this sort of thing that's going on?
Yeah, so I'm well aware of it, and I'm
sure.
Obviously I follow all of the stuff that's come out from on it, in particular from Dan Needle and others. I haven't got involved in any cases, quite frankly, is what I can say.
That's fine.
I've looked into it. I've there's obviously, look, it's a very, very messy situation, and for people involved within it, and in particular for the clients who've been sold this particular scheme, planning, whatever you want to call it, depending on where you sit on the spectrum on that. I mean, it doesn't look very good on the face of it. I was in HMRC when we investigated certain marketed schemes where they didn't do what they said they did, and that was, in one particular instance, was investigated criminally by HMRC because effectively there was a suspicion that documents were being falsified, even though it was a marketed scheme led by advisors and so on, because there was a suspicion and actually quite good evidence. They did do that.
Sure. So my question is more around not the technicalities. We can leave that to those that are involved. It was just around the angle, which is that I'm aware that HMRC previously opened up inquiries into certain Property 118 clients, and this is me just being open, not picking a side. This is just me genuinely wanting some insight, and I believe that this. One of the reasons for this whole podcast is we should discuss such matters openly and with an open mind. So I'm aware that HMRC previously opened up inquiries. I'm talking about before the last 18 months or 1 year that everything's sort of come out into the open. Previously, so let's say 2017, 18, 19, 20, whenever, HMRC opened up inquiries into the incorporations handled by Property 118 and Cotswold barristers, and they closed the cases. Okay, they did a full inquiry, they looked into the matter, and they closed the cases. Now, and it's a bit, we're sort of speculating again, but I just want to understand what happens if HMRC have been, in a way, you could say they've been pressured to look into the cases again. Now, what happens, or how does it look? What are your views in terms of, okay, they open up another inquiry now on other clients, so they've previously closed inquiries on separate clients, and now they've opened up inquiries on new clients, and they come out with a different, different outcome.
Yeah. So
does that make sense?
Yeah.
How do you balance those?
Anyone listening who's been subjected to those previous inquiries and effectively had the okay from HMRC, I would advise them to make sure they've got someone who's willing to be quite robust with HMRC in terms of what they can and can't look at. Now, every tax year has, in a way, you can look at it you should really look at it in isolation. So if HMRC has looked at something previously, they can look at it again if they've got a statutory power. But there are all sorts of potential arguments around what information's already been provided, what they've already looked at, and so on. In the very least, in respect of any penalty mitigation and so on, right? Now, HMRC might turn around and say, and again, I don't know the inner workings of what was provided in these cases or not. I am aware of those situations. I have had conversations along those lines that, HMRC looked at our clients in the past, and why are they now looking at them again just because there's been this kind of publication about it and someone else has effectively done HMRC's job for them in terms of looking into things, and kind of put all of this expose out there which HMRC now has to kind of deal with. Now, that should be handled quite sensitively. There are arguments that can be made in terms of, at the very least, the fact that HMRC looked at those previous years and closed them, I'm assuming, as nil adjustments, then HMRC really shouldn't be going back and opening those years. Whatever the technical merits of the scheme itself or not, if you've looked at something, and as long as the clients and the advisors were open and transparent with HMRC within the realms of what HMRC was due to receive, then they shouldn't get any comeback on them now. Now, in terms of going forward, there's a case there that probably needs to be again handled sensitively. If HMRC are now looking at stuff which is they've looked at before, but they're saying, okay, fine, we'll leave alone the old years, but we want to go into the future years, again, that should be handled with care. It'll probably come down to the technical merits, but it's one of those that each case will have its own nuances where you might be able to argue the point about you've already looked at it and you okayed it, so why should we now make adjustments? I know of some advisors, what they're doing is, okay, fine, if you're saying it doesn't work and because of all the spotlights and so on, going forward we will submit returns in the correct way according to HMRC's and the what I believe to be the proper technical construction of the matters, but you can't touch the historic period. So I know advisors who are taking that view. So when they're coming to now submitting the returns, whether it's company or personal returns or whatever, they are now trying to do it in a way that it's in line with HMRC's current view, but they're trying to argue with HMRC to say don't touch the historic period because you've looked at this and you've said it was okay. Now, where that's going to lead to, nobody knows at this moment in time.
Okay, very, very interesting. Yeah, very interesting. Because I was just thinking more along the lines of you're attacking. So the attack is on a certain strategy. For example, a certain strategy that was used on incorporation. I'm just being very generic, and we don't want to go too much into this, but a certain strategy on incorporation, HMRC, previously they looked into similar cases where the same thing was, the same technique was utilized, and they closed the cases. And now, as we say, because of the public spotlight and the rest of it, the same strategy and technique has been used, but now you feel pressured to look at it a different way. Is a proper conflict of interest, because I'm pretty sure there can be pushback. Which is that the same strategy was used 5 years ago, and you opened an inquiry and you closed it down with no issue, and now because of the public spotlight, you're coming out with a completely different opinion or completely different view. It's just a bit. Do you get what I'm saying? As in, the legislation is still the same. So how can you now come out with something with a different result?
I think the legislation is still the same. I think case law obviously is not really developed that much more, I believe, in that area. Again, it's not an area I forwardly advise on. I would normally send them to
Sure,
you or one of the other chartered tax advisors. I know I don't normally deal with
sure.
it, so I don't keep on top of it until I need to deal with a problem. But I don't believe it's too many more new principles in terms of what's developed in that. But
Mm,
from HMRC's perspective, I think you got valid points there. Absolutely, I can see why many would be uh, holding that view, quite frankly, because if HMRC's looked at something, and then okay, again, it goes back to the point. Why might they have taken those decisions in the past and all that? I'll give you the same list of three things I gave you earlier, similar reasons, or probably a few more.
sure.
Um, but look, the thing is, and I'm not in any way trying to take HMRC side. Anyone who's been a client of mine who's worked with me knows I hold them to account very, very, very strongly and forcefully. But in a
Sure.
sense, any bits of planning, HMRC will say, needs to be looked at year on year. Now, if you've done something in the past and
Okay.
they've kind of not picked up on it or whatever, that doesn't preclude them necessarily from looking at it for a particular tax year and then coming up with in their view, the right conclusion. Now, ultimately, the end point for any of these disputes will be the tribunals, the courts,
Sure.
right? So anybody who's got cases in this arena and is feels strongly enough, and unfortunately I'm having to say this, has the deep enough pockets to take this all the way, will have to take it to the courts, not just the first tier, I would assume the upper tier and beyond, to be able to get a proper ruling on it. Now, there's all sorts of issues around that in terms of the costs of it, but also by the time that happens, what
Mm,
happens with everyone else. Look, what we're talking about here, really, if you dial it back a little bit as well, is you're talking about people who have legitimate expectation because HMRC looked at certain things. You have people who are saying, well, you should be time barred now from going back and doing anything because you already looked at it. All of those are specific constructs within the law, and they need to be looked at in particular. The other thing I would add
sure.
is each again, kind of playing the HMRC's advocate here, so to speak, is I won't call him the devil, but let's call it HMRC's advocate for now. Is you, each client is independent. So even if they've looked at 50% of your clients, the 50% they've not looked at are on their own. They'll have their own facts, right?
Sure.
As you touched on earlier, property incorporations. You can't just say 20 hours and it hits the, I think, is it the Ramsey case, whatever, it hits the threshold and
Correct.
you're going to make an argument. No, it's fact specific. So HMRC and the courts, I would hazard a guess, and I would even say rightly so, would say this is fact specific. So if you have been looked at, you know, the whole point is, if your argument centers around this worked for everyone else, why doesn't it work for me? You're almost on a hiding to nothing because you're arguing it's a scheme. You're arguing it's a set of steps that everyone's going to take. So this is my
Mm,
old inspector coming out, right? If I was sitting on the other side, if somebody said
mm,
that to me, I'd be like, well, you just proved it's a set of steps that are preordained and it's a scheme. So
mm.
schemes by definitions are not meant to work because they're schemes, because you can't just take one thing and
Uh,
copy paste it to other people. So
correct.
yeah, that's kind of my kind of. I know I
Yeah.
went along in all sorts of different directions there, but you
No,
could
no.
record a couple
Yeah.
hours discussion alone on that question.
100%. Yeah. Yeah. Yeah, to be honest, I had no intention to discuss this matter, and we've
Yeah,
gone through what we're going to discuss. And
yeah.
sorry for putting you on the spot. And even
No, no.
myself, I just want to make clear that I don't endorse any particular strategy, and this, that, the other. For me, it was just about we started to discuss property incorporations. I think you brought it up, so I thought
Wow.
we might as
No,
well.
look, there's no my line of work, Omar, in my specific line of work. I know we're both tax advisors and all that, but in my line of work, I don't hesitate in discussing difficult topics in any way. I think that you're
Yeah,
right when you said it earlier. This is the point of these things, right? Because we're talking about it doesn't mean either of us holds a particular view or elsewhere. It's just
yeah,
if you don't have those discussions, then end of the day, the way I see it is my job is when a client engages me, my job is to hold HMRC to account on their behalf. Good,
sure,
bad, or otherwise. Most of my clients haven't paid their taxes properly in the past, right? It's completely honest about it. People who come to me, either have or are suspected of not paying their taxes. My job is to get them on the straight and narrow or prove to HMRC they're on the straight and narrow. I deal with
Sure.
those situations. I wouldn't be doing that if I wasn't having difficult conversations with my clients around why they did something or why they didn't do something. So I think
100%.
it's important to have those discussions, and it's important to
100%.
question these things as to why they're happening, because if we don't, then we'll end up with a revenue authority that's not going to be held to account, and it's going to just do things in a certain way. And I don't think HMRC would want that, and I don't think anyone it's in the best interest of any taxpayers for that to be the case.
100%. Totally agree. No, thank you very much for your insights. The other thing that I want to quickly discuss before we move on to COP8 and COP9s is around the climate with the research and development tax credits. Have you seen anything recently? What are your views? Yes, we completely agree that a lot of fraud has been undertaken whereby advisors, cowboy advisors have been inflating figures, but also, licking the finger and picking a figure out of the air. So we appreciate that's happened, and now HMRC over the last 18 months or so, they've pushed back, they've implemented new strategies, new forms, the additional information form, the notification, advanced notification, and they've opened up a lot of inquiries. Now we appreciate that that this needs to be done to protect the overall economy, the taxpayer, and to protect the scheme in and of itself. But then the flip side has been that a lot of business owners, and I speak to business owners about these kind of matters, they've been scared or fearful to put forward certain claims, which really and truly they shouldn't have that fear. So it seems like HMRC have gone too much on the other side, and now it seems like they're coming back to the middle. But broadly speaking, what's been your recent experience when it comes
I
to
think, look,
research and
I think
development tax credits?
I think with R&D, I think HMRC wouldn't disagree with this, that their approach has been to change behavior, right? It's change attitudes, change behavior. I think even HMRC, in the elements that I have seen, have recognized that they probably went in too heavy-handed into this.
Sure.
But equally, like you say, it is an area that's been heavily abused. I mean, I remember when I joined HMRC in sort of around 2013, and disguised remuneration was sort of the hot topic, EBTs and so on, and I worked a lot of those cases. Even then, when I used to hear about R&D, I used to feel like this is going to be the next disguised remuneration. I
Serious?
felt it then. It was just
Wow.
because everything I would come across was, it just gave you that vibe. Everybody was getting in on it. People I would talk to had no idea that what they were dealing with were submitting R&D claims. And even when I left, I had that. And it was just a case of when it was going to blow up. Because like people probably saw this with marketing schemes in the early 2000s, and then with the disguised remuneration later on that. And then, well, at least my view on when I was training and learning and working cases, not that I did a lot of R&D cases at the time, it's just what I was hearing out in the industry. I remember saying it out loud to some colleagues that this is the next disguised remuneration stuff, because it's so heavily abused that you could see it.
Wow.
But it all comes with, that I'm not saying HMRC necessarily turns a blind eye to things or anything like that in particular, but there needs to be a will, a political will, a will within HMRC to go out and tackle certain things. And sometimes it's not the interest of the country, the economy, HMRC to tackle something until it needs tackling. I don't know what happened in particular, but clearly the pendulum swung way too far to this side, where everything's been done in a very I think what HMRC tended to use in VAT fraud cases back in the 90s and 2000s around carousel fraud was a volume compliance approach. It was very much a process, and we were gonna hammer out all of these fraudsters, but the thing is, VAT is a different type of tax compared
Sure.
to R&D credits. So look, my view is it needs cleaning up. But at the same time, what clients need to do is make sure they have a reputable advisor who's going to do the due diligence, who's going to make sure there's a legitimate claim. And if there is a claim, then not to be put off by HMRC is activities.
Correct.
Because if you have a legitimate claim, that's what the legislation serves. Now, I fully appreciate, however, certain lines of arguments that HMRC is raising also makes it quite challenging to decide what is or isn't going to be a strong claim. Because, for example,
Sure.
the whole take on competent professionals and so on, like who is or isn't a competent professional. I think there was a recent case around somebody could be that from experience alone. They didn't need qualifications, and I think HMRC changed their stance on it. Um, but look, if you've got a claim and you've got, you're dealing with good reputable advisors, then you should take a risk-based approach, but ultimately that shouldn't put you off, because if you've got a claim, you've got a claim. If you firmly believe it is,
Exactly.
and you're not in that category where an advisor was leading you on and put claims in, then I don't think there should be that level of fear, because HMRC is still paying out claims. It's not like they're not. It's not like
Yeah,
they're
yeah,
not paying
100%.
out anyone, right? They are risk.
100%.
They are getting better at the compliance activities they're undertaking, at the investigations they're undertaking. They're doing it in a better manner day by day. I think it's improving. Um, and I think it will get better, but I think in a way HMRC would probably say, and I'm not sure if I completely agree, but they needed to get worse before it could get better in terms of their approach to things, in terms of the heavy-handedness, because they needed to go in and shake a few heads
Sure.
and go sort this out. And I think
Hmm.
I think that hopefully starts to happen.
Sure. Sure. No, no, I agree with you. Um, because I've come across cases whereby, so as you say, what we do is we undertake a review on the house. So, not chargeable. We assess the situation. Myself, my colleague, who's well versed as well in R&D, undertake a review. And if we believe there's a claim to be made, then there's a claim to be made, right? For example, the BEIS guidelines is there for interpretation. And, for example, I came across a case, I think probably been about a year now, but HMRC, they pushed back on a case, not prepared by us, prepared by another firm. And it was around, we found something similar on the internet. And when I first read that, I found it so bizarre. I was like, are they actually pushing back with this line, which is, we've seen something similar. And then on LinkedIn a few weeks later, or a couple of months later, a lot of other advisors, they were talking about how bizarre, some of the responses have been from HMRC. And then I was like, oh, phew, it's not just me that is sending those kind of, or it's not just me that's seeing these kind of, bizarre pushbacks. So it's just about balancing everything, understanding what exactly is happening, and then from there taking a decent approach, and going with the flow. It's not
Absolutely.
about it's not wise to be fearful. It's not correct. You have
No,
to
no,
balance the whole
absolutely.
matter.
And ultimately, if HMRC is not careful, they will stifle R&D, because if this
Exactly.
it is important to businesses to get the credits to be able to continue some of the work that they're doing. I've seen that line of argument. I've seen the line of arguments around well, this knowledge wasn't unique to you, or it's sort of, it is widely available, or how is this? I mean, it's setting. I've seen in certain cases it's setting such a high bar that nothing could ever qualify for R&D if you
Exactly.
took those. I think I saw someone I think it was on LinkedIn. I saw someone gave an example around HMRC arguing that you just use an existing computing language to code this. So I'm like, so what? You need to create a new language for it to be R&D altogether? That sounds a bit too high a bar.
Yeah.
But yeah, I think look, clients shouldn't be fearful. They should take reputable advice, and they should, after,
Sure.
like you say, like the service you're offering, you do the review, and if you think it's viable, then you proceed with it,
Exactly. And
and so
as I
on.
say,
So
it's all up for interpretation. So we can't just, HMRC can't, it shouldn't be that, HMRC have pushed back with something and we all just sit down and say, yes, 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 your interpretation is correct. Interpretation is about, two different people or two different companies, different organizations will all have a different interpretation. So that's what I'm trying to say, which is we have to be proactive as well. We have to push back, because an interpretation is an interpretation. It doesn't mean that one side is, just because it's HMRC that they're correct. And we also are aware that, when they started to push back on the R&D claims, they recruited, a whole load of individuals with minimal experience, whether that's, in terms of the whole tax angle, which is the financials, how it's calculated, but then also from the technical side. So we just have to, and I think it comes back to one of the points I mentioned earlier, which is sometimes when someone sees a letter from HMRC, they automatically go into defense mode, but that shouldn't generally be the case. It should be, okay, we've got this letter now, let's deal with this, in the right manner.
Yeah, I think that dreaded brown envelope makes a lot of people uneasy and nervous, and I think what I'm always trying to do is try and take that away from at least people who approach me, and ultimately if they are my clients. So it's like, look, it's another letter from HMRC. So yes, there are a enforcement body, and they are, they're even, if you want to take it really far, they're even a prosecuting body when they need to be, but they go through the CPS in that regard. But ultimately they are bound by rules and regulations and law, effectively, right? So you have to hold them. We talked about this earlier around investigations inquiry. You have to hold them to account and for those things. And I really do, your point around interpretation does resonate. So in my line of work and across tax, really, a lot of time you come across HMRC's guidance says X, Y, and Z. Well, HMRC's guidance is the guidance, it's not the law. That's their view of things. The law is ultimately the law. We touched on it earlier in terms of case law and so on. The legislation is the legislation, and the other binding thing is case law at upper tier and above. Even the first tier isn't binding on anyone, right? So you can take guidance from it. You can take direction from it to a certain extent, but at the end of the day, that's not what the law is. I mean, there's been plenty of times I've had in my cases where I've had to literally sit there with an Oxford dictionary and figure out what the meaning of a particular word is in the English language itself, how it's been used, to be able to argue that point with HMRC. That's how we operate in this country. In UK overall, and obviously there's no UK law, it's England and Wales and so on and so forth. But anyway, we operate a common law system when it comes to these things. It's based on the legislation, based on judicial commentary, jurisprudence, right? That comes together to create what the law is. It's not on one side or the other. It's not set in stone in that way. If you just take the example of the developing case law over the last 60 to 80 years over what you can do, what's tax planning and what's not tax planning, and what's avoidance and what the courts have ruled, and then you ultimately end up with this purposive construction of the law and how you should be doing it, rather than a literal interpretation or a mechanistic interpretation. So all of those things have developed. Why? Because we don't have a set prescriptive bit of, set of legislation. It's there to be, even the legislation is there to be interpreted into the normal use of the language. For example, just one more before I conclude on this point, is reasonable excuse. In my line of work, I argue a lot about whether my client has a reasonable excuse for a particular failure. If you have a failure offence, you can normally argue reasonable excuse if your circumstances fit. What does that mean? There's a whole heap of case law on that. I think the most recent authority that binds is the Perrin case, and that sets out objective tests for when you can determine what is effectively a subjective term. Those kind of things, So yeah, not to be fearful, and to take good advice, and to proceed with caution and risk in mind, but to proceed nonetheless with what's most beneficial to you.
100%. Much appreciated. Much appreciated. COP 8 and COP 9. How would you? So to be honest, this is an area that I haven't really come across personally. So whatever you explain will be very, very useful and beneficial for me as well, and definitely for the viewers. So COP 8, COP 9. in my mind, is something, very high level. We're looking at something very, very serious. How would you explain what COP 8 is, what COP 9 is, what's the difference? Are there any other COPs? Go for
Not
it.
anymore. So these are codes of practices. That's what COP stands for, COP. These are
Sure.
codes of
Yep.
practices. So historically, HMRC had numerous codes of practice. These were well before my time as well. So I have never got experience of them. But COP 8 and COP 9 have existed in all of my time in tax. But when I was in HMRC, thing I learned was there were other codes of practices which they were used to carry out certain types of investigations. They've all dwindled away or been incorporated within the legislation, and it's all become more formalized. Code of Practice 8
Sure.
and 9 are the remaining ones. Now, what they are, so firstly, who uses them? Let's deal with that. Firstly, it's the Fraud Investigation Service. So within HMRC, you have various different directorates. You have the large business, you have individual and small business compliance, you have wealthy and mid-sized business compliance, you have Fraud Investigation Service, you have a few others, but let's just stop there. Fraud Investigation
Sure.
Service is supposed to be, as I've heard it described in the past, is sort of the SAS of HMRC's compliance sort of directorates. So all of the ones I mentioned, they all deal with making sure you're paying the right tax at the right time for their own particular, as HMRC would call it, customer segment, right? They deal with a particular part of the population. FIS sits not necessarily at the top, but it sits alongside these to take on the most serious cases, supposedly. Now, that as the name suggests, it deals with cases which have a suspicion of fraud, tax fraud, but it also deals with cases that are complex but don't have a suspicion of fraud, and so on. There's lots of different parts of fraud investigation service. I won't go into that, but fraud investigation service incorporates HMRC's criminal investigation arm. So that's a part of FIS now.
Sure.
It used to sit separately as criminal investigations, CI. You had specialist investigations, SI. They merged to form FIS. Within it, it has the civil investigation teams, and even they sit within different subdirectorates. I won't go into that. It's going to get confusing for people now. Code of Practice
Sure.
9, start with that because it's the most serious civil investigation HMRC can carry out. It's used for cases where
Okay.
HMRC suspects tax fraud and it has good evidence for that. So what it does is it puts you through a process where it will decide whether, if it thinks you've committed tax fraud, does it want to prosecute you? So, sorry, does it want to, so let's use the right terminology, does it want to investigate you criminally with a view to
Yep.
prosecution, or does it want to offer you an opportunity under Code of Practice 9?
Yep.
That's an internal working. For various reasons, it will decide, nope, we want to offer you Code of Practice 9. Code of Practice 9 comes with what's called the Contractual Disclosure Facility, CDF. CDF is a process. It underpins COP 9, and what it basically does is you get an opening letter which says, we think you've committed tax fraud. Here's a contract. Here's an outline disclosure form. If you tell us what you've done and we accept it, we won't prosecute you for what you put into the forms. There's
Okay.
deadlines for that, so when you get that letter, you have 60 days to respond. You respond to that. You send it back and so on and so forth. HMRC accept it, they enter it. Then you have a whole process where you have to have an opening meeting, very detailed, where you go through all of your tax affairs with HMRC. You then have to commission a report by your advisor to be prepared for HMRC. So HMRC takes a back seat in these cases because what it's saying is we're not going to prosecute you, but it's for you to tell us everything. But if you don't, then we'll throw the book at you. And then it'll sit back and
Does
let you.
HMRC know, as in HMRC,
Yeah.
do they already have background information though, right? For
Yeah,
them
yeah.
to
So
even,
this is not done. COP 9 is not meant to be used speculatively. It is used. It is used in a very directed manner. So HMRC will carry out before a COP 9 is issued. It will
yeah.
carry out a very detailed review. It's called, there's a registration process basically. When I
Okay.
was in HMRC, I had to write very lengthy reports for my operational leaders to sign off before I could even issue a COP 9. So I'd effectively
Okay.
carry out a mini investigation in the background. And sometimes a proper investigation, including third party information notices and so on, can be done well before HMRC is issued it. So they gather all of the
Okay.
data, then they issue it. So the process is about you telling them, and if you don't hit the mark in terms of if you don't tell them what they already know or they suspect they know, then you're probably going to face some serious consequences. Because at that point they'll know pretty much everything. And you know, the thing is, they'll never tell you what they know at that point until you've signed the form. Until they've accepted you and you end up at the opening meeting, they're not going to tell you what the suspicions are. It's for you to tell them everything wrong that you've ever done in the last however many years. And like I said, it's a very process driven in you know, investigation style. HMRC will ask you to do a report. You'll have regular meetings with them. Your advisors will, to check in on and make sure things are going as planned. And then eventually you submit the report, you pay the money, HMRC looks at it and hopefully signs it off. Now, where it goes wrong is either you don't do the first bit right, you don't tell them what you're supposed to tell them, and then they start a criminal investigation, or they could still start a civil investigation, still keeping you under Cop 9, and then just basically go after you. And that can happen at every stage from that point up to when it's concluded. So if HMRC think you're not cooperating, you're not playing ball, at any point, it can take over the investigation. So it's not like a cast iron guarantee that you'll get to take control. You still have to abide by what you're signing up to do. You can ask for Cop 9 voluntarily. So if you tomorrow got a client who says to you, Omar, I've got X number of properties, I've made a few million from them, but I've not paid any taxes. We will be having a chat and I'll be saying to you, Omar, let's get this person most likely into Cop 9 because it offers them immunity from prosecution and the numbers involved and so on. There's a very deep conversation to be had, but effectively, if you think that the numbers are big enough and that the individual, for whatever reason, would be a prime candidate for prosecution, then it's your job to advise them to go into Cop 9. Ultimately, it's the client's decision whether they do or not, but Cop 9 is available for people who have committed tax fraud and want to come forward voluntarily to enter into it voluntarily. So that's
okay. So just to
sort of
just a quick one there, because so what exactly? So Code of Practice 9. What exactly is it? Is it a mechanism for taxpayers to use to? Is it some sort of form? Apologies for, you know, these might be basic questions, but is it a form? Is it something HMRC? Is it some sort of power HMRC uses to invoke on the taxpayer? But then obviously just now you mentioned that you would advise the client to use Cop 9. So I'm just trying to understand what exactly is Cop 9.
It's a facility. It's a way of investigating. It's a
way of investigating from HMRC. Okay.
Yes. Yeah. Effective. If you wanna pick it. So I remember having this conversation with one of my my senior managers and mentors at the time in HMRC. I had this existential crisis. I was like, what is Cop 9? Right? How is it? A Section 9A inquiry? Is it a Schedule 36 notice? What is it? And the best way it was explained to me was HMRC, under their provisions for administering the taxes in this country, have discretion in how they go about doing that. Part of that discretion is, if they don't want to criminally prosecute you, they offer you to come into this process and say, we won't prosecute you, you got to tell us the truth. It still has to be underpinned by all of the inquiry powers, assessment powers, information powers, but it's this catch-all process that HMRC have brought together, which says we won't prosecute. Now, the history of Cop 9 is very detailed. It goes back decades and decades. It's something that was it was something that was within the Hansard procedure. So it was, you know, it was documented through that. It was called the Hansard procedure. So there's various. Cop 9 has been underpinned by various different vehicles for you to make a disclosure. Like I said, Hansard procedure. There was the Civil Investigation Fraud Facility, something like that. There was a different name. Currently, it's the Contractual Disclosure Facility, CDF. So it is effectively, in a nutshell, a disclosure facility for you to tell HMRC the truth.
Okay.
Whether you're offered into it or you ask for it voluntarily.
Sure. Okay. So what comes to mind then? For example, we have the Let Property campaign, for example.
Yeah.
Are there any connections? I'm
So
assuming
Let Property
not,
campaign,
but the concept is the same, right?
So Let Property campaign obviously is a long-running campaign, over a decade old, which goes after people with property income, right, at a certain level. So HMRC either goes after them, or you can go in and ask for it, and so on.
Yeah.
Code of Practice 9 is a disclosure facility, but specifically if you are suspected of tax fraud or if you want to admit to tax
Okay.
fraud. It's
Okay.
not for
I've understood
anyone
now.
who doesn't want to admit to tax fraud. The key distinction is, so you can go into the Let Property campaign through the digital disclosure facility, through the
Yeah.
mid-sizes customer engagement portal, or even voluntarily to Fizz through COP8, which I'll come back to later.
Sure.
You can make voluntary disclosures in all sorts of ways, and HMRC
Okay.
can start inquiries in all sorts of ways. COP9,
Sure.
it's for all of those things, but when it's suspected of tax fraud, so it takes over, it takes
Understood.
precedent, tax fraud, because it gives you immunity from prosecution. That's a key thing. There's one thing people should remember when they hear the COP9 is tax fraud. That's the distinction.
Okay. Excellent. Completely understood now. So
Yeah,
that's the key distinction, the fraud aspect. So it's very serious, you know.
absolutely.
And then COP8, what would you say is the key
So
difference between the two?
COP8 is it's similar in a sense. It's a process. It's under HMRC
Sure.
sort of, the wider administrative powers. It's something that HMRC does on a does off not necessarily offer, but sort of uses to conduct certain types of investigations. Now, Code of Practice 8 again is used by and strictly by the Fraud Investigation Service, and it's used in cases where it doesn't suspect tax fraud or it doesn't have the evidence to be able to demonstrate tax fraud to the level where it would then issue you with a CDF offer, where it will say to you, come and enter into CDF and we won't prosecute you. Because the thing is, if it internally doesn't think it's got the evidence, it's not going to offer you that. It would be improper for it to do
Yeah.
so. So
Sure.
it's used in complex cases. It's used in cases where there's significant technical challenges potentially, and it's a wide-ranging investigation that warrants fraud investigation service involvement for whatever reason.
Sure. Sure.
You can ask for it voluntarily, so you can go again. So if you got a case, so I've got a case at the moment. It's not a fraud case, right? The guy is not committed tax fraud, but his liabilities are significant, and
Sorry, Salman. Just to quickly question,
yeah,
you're saying that he has not committed tax fraud.
no,
Now,
in my
but
opinion.
that's based on your assessment, right? From the taxpayer's defense. HMRC can always come back and say he has committed tax fraud, correct or not?
Of course they can. There's always a risk. There's a risk of that.
Okay.
Anything that you enter into other than the CDF, there's a risk of that. Now, the thing with Code of Practice 9 and CDF is it's expensive to deal with, right? You're not going to
Okay.
deal with that on the cheap. So you don't go into it unless you have significant liabilities at stake
Yep.
and you're a prime candidate for prosecution. It's not something you enter into lightly. Now,
The CDF, right? Or the COP
yeah,
9?
yeah. The Code of Practice 9,
The Code of
CDF.
Practice
It's the
9.
same
Okay.
thing. Yeah, it's interchangeable terms. Basically, it gets confusing, but it's the same thing.
Oh, is
Um,
it? Okay.
in a nutshell, it's the same thing. I'm sort of summarizing and simplifying here. Now,
Sure.
Code of Practice 8, like I said, it's a judgment call. If you're going to put somebody into Code of Practice 8 or any other disclosure facility, you have to make a
Yep.
judgment call, be with the client, highlighting the risks that I think you need to use this facility, or my advice is you use this facility for X, Y, and Z reason. Now, if the liabilities are significant and the issues are serious enough, I'll always advise the clients of Code of Practice 9. Ultimately,
Sure.
with their agreement, you have to come to a conclusion that what they're willing to do or not willing to do, right? They may not be
Sure.
willing to accept tax fraud regardless of what they've done. Some people will not like to admit to that term, so they will not accept going into it. So Code of Practice 8, like I said, HMRC uses it to initiate inquiries, so fraud investigation service, where it's complex issues and so on and so forth. And then you can, I've asked for it historically on a voluntary basis where cases I feel do not fit into Code of Practice 9, and I don't want to use any of the other facilities for whatever reason, because I'd rather it went into fraud investigation service, it went into some really good inspectors who I know will who are competent, technically well trained, are going to be able to understand the situation and help me get the client on the straight and narrow and get their liabilities paid up. So it's a
Sure.
judgment call at the end of the day. Code of practice doesn't have a set criteria that you can go into voluntarily or that HMRC may use it. They'll just use it where they don't think there's tax fraud
Sure. Sure. Understood.
or they can't cross those
Understood.
thresholds more appropriately.
Yeah. Yeah, I think this requires an episode in and of itself in the future.
Yeah,
So we
yeah,
can always come back to, you mentioned CDF, COP8, COP9. We touched on Let Property campaign. There was DDS, right? Digital Disclosure Service.
yeah.
Um, so that's the angles that we can look at. Um,
I think there's a
I
there's a
think
there's a episode titled voluntary disclosure that should stand on its own, quite frankly, and even that wouldn't cover any
voluntary
of these.
disclosures, is it?
Yeah, yeah,
Okay.
basically. So,
Voluntary disclosure.
how do you go about making one? How do you how I could that's a whole Pandora's
That's
box of
another 2 hours,
question.
huh?
Each one of those things is
Like,
probably a few hours, let alone the whole thing, right? But it's a question.
wow.
This is something I deal with. And most of my clients are going forward voluntarily to HMRC, either through I would still call it voluntarily when they get a nudge letter. So not active investigation. So I'm always trying to place them into the right bits of HMRC, and
Sure.
I'm trying to find the right angle. So it's a bit of a process in and of itself to come to a conclusion where that particular disclosure needs to go.
Excellent. Excellent. I noted a couple of questions whilst you were talking, throughout. You mentioned the R&D thing. You said you had this sort of insight, which is that this might be the next big thing,
Yeah.
in terms of issues and fraud and the rest of it. Did you say that was in 2013 or 2018? I didn't hear you properly.
So between 2013 when I started onwards, so when I started to
Okay.
get trained in HMRC and stuff like that, look, my journey in tax starts at a point where I didn't have a clue about what tax was until I joined HMRC and then learned all about it. I didn't have a finance background or an accountancy background. I did to a smaller
Sure.
extent, but I'll put it this way, in my first business that I started after graduating, I asked one of my accountant friends if I paid money on everything that was in my bank account or what. I didn't have a clue what profit was, what capital was. So as I started learning and I was in HMRC, I got trained up and I started gaining knowledge and started working cases. It was between that time, between 2013 and probably I would say between 2013 2015, where that intuition, where that kind of that kind of sixth sense started to develop, and you're looking at different issues like
Sure.
restaurant trades and cash, property people not paying their taxes. When you're an investigator and you're working all these different cases, you start to get a feel for things, and R&D alongside those other two things I mentioned was one of those. I felt like, but R&D fitted that mold of it. Was everybody was going after it, lots of people were trying to do it, and it seemed to have been that sort of everybody's trying to sell this thing where it wasn't necessarily their
Sure.
expertise. It was similar to what happened with disguised remuneration. It was a marketed scheme. It was a marketed, all right, set up an EBT, set up a this, set up a that, contractor schemes,
Mm.
this schemes, that scheme, and it's still going on to this day. Some elements of it,
Yeah,
but like
exactly.
EBT was
Yeah.
sold to every single. People tried selling it to every single owner managed business effectively, and it just became a
Mm.
stack 'em high, sell 'em cheap sort of thing. And you
Yeah.
could
Yeah.
see that, I could see that, and others could see that with HMRC in HMRC going, this is doesn't smell right.
So effectively, what we're saying is you correctly had the foresight and the insight to suss out the R&D
I,
fraud
I would I
that
wouldn't take
was to
any.
come.
Yeah,
Yeah,
I
that was to
wouldn't put
come.
it any I wouldn't put it down to anything more than an inclination and a hunch at the time, to be honest with you. But if
Yeah,
you
but
wanna, that sounds too grand
yeah,
for me, to be honest with you, Omar. That sounds like I had something to do with whatever happened after.
you had the correct hunch in terms of R&D. So it begs the question, which is, what's your hunch as at 2nd September 2024? What do we need to keep an eye out for? What's the issues?
I think it's a very good question. I think I would say, and I think it's already happening already. The next thing was this whole stuff around property incorporation, because it's not at the same scale by any stretch of the imagination, but
Sure.
you know, stuff that's already out there in the domain, right, around the people you mentioned earlier and whatnot, you could see it's heading in the same direction. Is there anything else I can think of at the moment that's on the horizon that I feel like I'm looking at it and going, oh, that's a bit. I think you still have umbrella companies which are still kind of, pushing the boundaries significantly. Certain umbrella companies, not all, which are trying to offer this sort of off payroll route. I think that's still gonna keep rumbling on. I think R&D isn't going away anywhere anytime soon. You still have, I think this whole property incorporation bit, whether HMRC is gonna deal with it, whether they're being pushed to deal with it right now and they're gonna keep doing it in the future, I don't know. Um, Look, at the end of the day, there's lots of economic impact from the back of this sort of activity, right? And there's, I don't know how much of this goes on at the top ends of HMRC and into government, but you don't want to try and destabilize certain segments of industries and markets and so on too much, because that will then have a negative impact on the economy. I can't think of anything else other than what's already rumbling on right now, and honestly, that I have a hunch about. But those things are quite significant at the moment. They haven't completely got dealt with. So I would say keep an eye out on those things. I think you'll see more investigations into property stuff. I think that's an area that just hasn't ended. Whether that's Let Property campaign, I mean, it's going strong. I still get a handful of inquiries every month from people who've not paid their taxes on property, and that's just me. And I'm
Yeah.
only a 5.5 months, a firm, and all the way to the top end of that when it comes to incorporations and partnerships and all sorts of other things that people have been advising on and doing. And I think certain elements of the profession have possibly stretched the boundaries there.
Excellent. I had to ask the question. I had to ask.
No, no, no.
Did say we'll discuss nudge letters. For the viewers, we'll leave that for another episode. I really appreciate your time, and I think it's been very useful, very insightful for myself first and foremost. I believe the audience, the viewers, the listeners would also have highly benefited. 1 hour 20 minutes of insights, background, opinions on current issues. I think it's just all beneficial. So and we did discuss a few interesting matters, you could say. And, I think, as you mentioned, it's something we should do more. Which is, there's an issue. We don't just start running away and hiding from it. There's an issue there. We break it down and we discuss it openly. So yeah, any final comments? Any final thoughts before we finish?
My final thoughts are similar to what I always try and end these sort of discussions with. Given the nature of what I do and what I talk about, and kind of this discussion. Look, if anyone listening, if you're an accountant, you're an advisor of some sort, or you're a client, or a taxpayer, don't bury your head in the sand. Is my kind of imparting advice. Deal with the issues that you're faced with. Get the right professionals involved. I'm not the only one who does what I do. There's lots of other specialists out there, but make sure you get someone competent, someone who's gonna fight your corner, but also be able to give you good, impartial, professional advice in terms of your merits of your case. I get lots of queries where I'm thinking, listen, you're not hiding to nothing. You don't need my services. You just need to do X, Y, and Z and deal with it. I'm not there to make a penny out of someone I can't actually assist. So there's a lot of that goes on as well. So I would just say, look, if you're faced with the issue with HMRC that's historic looking, and it goes for anything to do with tax, get the right advice, get the right professionals. Make sure you get people who know what they're doing to deal with the specialism, because
100%.
your clients will thank you for it later on.
100%. Thank you very much, Salman from ADL Tax,
Pleasure.
and thank you if you've watched till this far. Then we really appreciate it. Leave us your thoughts, your comments, any questions in the comment box, and don't forget to like, share, and subscribe. The main thing here is share. We're giving away our time, we're giving away our expertise, our insights, our knowledge. So share it with those that will also gain some benefit. Thank you very much for watching. Thank you very much for listening. And with that, we'll conclude episode 6 of the talkin.TAX podcast, brought to you by myself, Omar Aswat, hosted by ASWATAX Chartered Tax Advisors. Thank you very much. Thank you very much, Salman. We'll speak soon.
Pleasure.
We'll catch up soon.